Hello traders, Steve Ganz here, and I wanted to share with you something that I do on a regular basis on my long-term buy and hold positions when I think that we might be looking at a potential reversal or pullback. Of course, one thing you can do in that situation is just sell out of some of your positions. But of course, that can have big tax implications, etc. I'm not trying to give tax advice here, but that's one of the reasons I don't often sell things that are nicely profitable, is for exactly that reason. But I still want to take some of the risk off the table. So I'm going to go back and look at this position. This is a position that I entered all the way back on October of 2023. This was in AVGO, and I bought one long call at that time, and I spent $9,800 on it. This is a leap, so this was a couple years out at the time. Now, AVGO has just rocketed up since that time. This position now has about roughly $104,000 in profit in it. Now, we're at a point in the chart right now when I look at AVGO, let me get this out of the way here, where it has been drifting down a little bit. Now this trade I'm going to show you I've actually done a few times along the way here, picking up a little bit of profit each time. But I'm going to share with you this time as I'm doing it, how I'm doing it. And so we have a downtrend line that so far has remained intact. AVGO is trying to make a higher high, it can't, and it sells off. Then it comes back, hits this trend line, tries to make a higher high, can't, sells off. Now this last sell-off was just like a textbook sell-off right into what we might call demand, or where a lot of buying has previously taken place. So I fully expected a bounce off of that line. Had I wanted more AVGO, that would have been a great time to buy some. But now it's bouncing up and it's hitting its head again on this downtrend line. Now, is it going to pop through? Maybe. But it could also be a reversal point again. So if I think there's a chance that it could be a reversal point in the short term, how can I take some of the risk off of this from this thing dropping from 160 back down to say 140? I mean, if this drops from 160 down to 140, I mean, I'm giving back $18,000 there, okay? So what I can do is I could either just sell calls against this, or what I like to do, because something that is as volatile as this is and the thing can rocket up, I like to sell call spreads. So if I came in here and I sold a call spread, a 165, 175 call spread, which is what I have done in this case, I'm selling this 165 for $7.65. I'm buying the $10 higher calls for $4.20. So that's what, $3.30 in credit that I am picking up. So $3.30 in credit, and I'm doing 40 of these. So that's about $12,000, $13,000 in decay that can now take place. So I'm at 102. If AVGO backs off, it's not going to be as dramatic or as traumatic to me, because this this call spread will have more and more value to it as the sell-off occurs. I've essentially flattened my deltas. We can see over here my delta, which of course is a measure of how much the value of the call is going to go up for each dollar in price movement. And I've got 10 of these, so that's 1,000 delta. It's a 1-to-1 ratio. So here I'm giving up some of that upside potential, particularly beyond this 165 mark. I'm giving a little of that profitability up if we blast through 165 in exchange for picking up some significant theta decay. So 102 here, if we stay right at our price that we're at right now, which is 157, if we stay right at that price for 30 days or so, I'm going to pick up that roughly $12,000 in theta decay premium. If we go up a little bit, if we go up to the 165, I'm going to pick up that theta decay, and I'm also going to pick up a little increase in the value. Now, if we bust up above 170, I will have an alert set on my chart. In fact, I can go do that right here. If we break above, I'm even going to say 165. Let's see, I'm going to set an alert, create alert. If we go above 165, I'm going to make a note to close out call spread. So I would be closing that call spread at that point at a little bit of a loss, but I would have, of course, picked up value in NVIDIA in the process, in my underlying long position. So I'm okay with that, because right now my sense is a little more that we're likely to get a pullback. And now if we get that pullback, I am not losing dollar for dollar in the pullback. I'm only losing 50 cents, 45 cents on the dollar in a pullback. And of course, I could do more call spreads to where I even reverse this the other direction if I wanted to. And I could potentially do that by, taking this strike out further. There's a lot of ways I could do this. But I just wanted to show the general concept of, if I'm thinking there might be a pullback forthcoming here, what are some of the ways that I might consider hedging a long-term position that I didn't just want to totally sell out of? So I hope you find this useful. If you do, please like, subscribe. Feel free to give me any thoughts, comments, etc. Down below. If there are specific things you'd like to see in the future, let me know that as well. Thank you so much, everyone. Take care.